Well, I'm trying it one more time. I think the audio got a little messed up with the live feed that I was just doing. So now let's try this again and see if here we go. Now I can hear. There you go. Now I can hear if the audio goes bad. But what we're talking about, the year is over. 2016 is gone. This is the last Wednesday of 2016. Can you believe it? Uh, and this audio is delayed, but I'm trying to be able to hear and make sure everything's good. And that's the year end. The year's over. And if you're a business owner and it was a great year, that's awesome, except the year's over. And if you're a business owner and the year sucked, that's okay. The year's over, right? So either way, the year's over. 2017 is coming, and there's some planning that we can do to help reduce tax liability. So one thing that I'm doing with my customers right now is we are talking through what is their profit and how can we reduce that. One of the things I want to talk to you about, the one thing that I want to talk to you about today is Section 179 deductions. That's basically accelerated depreciation. All it really means is if you're buying big purchases, equipment or vehicles before the end of the year, you get to count all of it up to $500,000. That's the limit from the IRS. You can take all of that in the year that you purchase it, as opposed to depreciating it over X amount of years, whatever the life of that equipment or vehicle is. So if you've got to buy a vehicle, you got to buy a computer, a camera, a phone, anything really that you would need to buy, you can do that before the end of the year and it counts against your taxable income, therefore reducing your tax liability, right? If you are looking at other things, and some people ask me this question, well, I've got this credit card balance that I want to pay off before the end of the year. Will that help? Or a loan, I've got to pay that off. Will that help? The answer is no. Credit cards actually they're accounted for as cash. So if you swipe your credit card on December 31st and don't pay it till January, February, whatever, it's actually already used in that year that you've swiped it. So it's already done. It's already accounted for. Paying that balance down is not going to help your tax liability. Now, from a financial standpoint, it's a good idea to pay off credit cards and pay off loans, but it's not going to help you from a tax standpoint. That's what's called a balance sheet transaction versus a profit and loss or income statement transaction. Those are the differences. So if you need equipment, now don't buy it if you don't need it. If you're sitting there thinking, oh yeah, awesome, I'll just go buy some stuff to save on taxes. Well, if you don't need it, you're spending money that you wouldn't have otherwise spent. And your tax liability is probably going to be less than that. So think about that, or talk with somebody that would have some information for you to help. When you're doing that, make sure you've got all your information with you, or you have everything accounted for. If you don't track your expenses, that's the first thing I tell people to reduce your taxes. Track your expenses. I've got go to toddfraziercpa.com and I've got a free download for you if you don't do that already. It's the top 20 business expense deductions for small business owners or 1099 contractors, and it's a list of 20 categories that you may or may not know exist for you to deduct, and you can go through that checklist and you have an idea of some things to write off in the coming months weeks. I'm going to be doing a webinar walking you through some of those categories so that you've got an even better idea of what it is that you can write off and what type of things specifically fit into that. I'm going to have a calendar coming up so you can see what kind of things there are for you to write off in those categories and kind of talk you through specifically for you and for your business. Also, I'm going to be doing some more live webinars, everything from setting up your accounting and running QuickBooks all the way through marketing your business and doing little videos like this and really getting your information and your product or service out to the people that need it most, that it helps. That's it for me. I think I'm going to call it good. If you listened to the earlier live broadcast, the audio got really scratchy and was not good to listen to. So I tried to put that information back in this video. If you want to watch the other one as well, you're welcome to. ToddFrazierCPA.com. Email me, Todd at ToddFrazierCPA.com. Oh, Venture Hub. My brother David and I have this consulting business that we do these podcasts, and the newest podcast is up on iTunes and SoundCloud today. Just go ahead and search the Venture Hub podcast. This episode is about the prep, where we talk about 3 phases of getting your business prepped, either for launch or for growth, whatever it is, whatever stage you are in your business. So go check out the Venture Hub podcast. You can check out venturehubconsulting.com. We'll be doing consulting webinars as well for that, for Todd Frazier CPA. There's going to be a lot of content coming in 2017, so buckle up and get ready. All right, guys, hope you have a great day. Have a safe New Year's Eve, and we'll see you in 2017. Have a good one.